Usually if there's a $5 account somewhere, it means there's something else because they have this kind of rule where if you're opening up a loan or you're taking out a home equity line or you're doing any of these kinds of
Yeah.
things, you got to have something in the savings. And so they throw $5 in there, right? And so that was a clue like, hey, maybe there's more at this particular credit union. And sure enough, there was actually a home equity line that her husband had taken out. She didn't know about it, that he had tapped into the equity in their home. Well, that's a big deal.
Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but are limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Encompass More Asset Management LLC is a registered investment advisor with the U.S. Securities and Exchange Commission and only transacts business in states where it is properly registered or is excluded or exempted from registration requirements.
Hey everyone, welcome back to another episode of the Ducharme Wealth Management Podcast, where we aim to educate people and equip them with the tools and knowledge to go out and have better engagements, more meaningful engagements with the professionals that they may need to hire or engage with that surround their financial lives. Today we have Rhonda Noordyk on the podcast as a guest. She's a certified divorce financial analyst, a CDFA. She brings in a lot of experience on advocating for people that are in divorce and helping them understand the financial situation and impacts as they go through this process. So it's a little bit of a heavy topic, but that being said, I hope you find some useful information in this episode. And if you need to, make sure you reach out to the right resources when the time comes. With that, enjoy the show. I was telling somebody about this kind of episode earlier today, and I was like, I'm having this like divorce advocate on, and they like looked at me sideways a little bit. And I was like, well, she doesn't like advocate for divorce. I mean, and then I was like, unless it really needs to happen. And then I was like, oh man, I'm like, this is sounding so bad. I'm like, and so what came to me was like, the way that I view what you do for people is kind of like what my wife's doula did for her when she was in labor, right? Like, my wife had, like you're in labor, you have so much going on. There's a million and one things, and there's all these nurses and doctors and everything's crazy. And, people are telling you to do this and that and breathe this way, and this is going to be fine. And do you want this medication and da, da, da. And like my wife's in the worst pain she's ever been in her whole life trying to push out a baby. And, and so like, that's where her doula steps in and says like, guys, everyone back off, like give her some space. Here's what we need, yes, we'll do that. Yep. We talked about that already, that she's, good with that or whatever. Right. And so all of a sudden the doula becomes this advocate for my wife that's in labor, and people are like, well, she's got doctors. What does she need an advocate for? And it's like the doctors, like they're great. And in St. George, especially, like we have a great midwife here, but like their job is to get the baby here. Their job isn't to like make sure that my wife is like the most comfortable and that her wishes and desires are being met the same way. Right.
Yeah.
Like it's just a sort of a misalignment of goals. Right. And so that's where the doula comes in. And to me, that's sort of what you do for, I want to say, I mean, I like naturally want to say women when they're getting divorced, but I know that you've worked with men too. So people, when they're in divorce and there's like attorneys pulling them this way and that way, and, infighting in the family and all this stuff going on. It's like, you were the person that comes in and says like, hey, calm down. We got this. Let's take a look at this objectively.
It's a great analogy. And I've actually had a doula. And so, I mean, I can say from yes, like absolutely. Great analogy.
Okay. So that's what, I mean, is there anything else that we should preface? But like, this is what Rhonda does.
So, I mean, I think at the end of the day, it's really helping women have a voice as they're going through this process, and helping improve their confidence during a time when they're really feeling overwhelmed and frustrated and all the things. And I've got, as we kind of talk through those different pillars, I'll give you I've got some acronyms, I've got some concepts that we can kind of just unpack a little bit, but.
Okay. So, I think there's sort of 5 key areas from a financial perspective when people are getting divorced that they need to be aware of, or that there's concerns around, right? And so one of those is like the big one, division of the assets and debts. That's like the biggest. I mean, that's probably what people think is like the biggest of them, right?
Yeah.
So, really quick, like touching on that, which I'm sure we can probably do a whole podcast on how to divide and think about dividing assets and debts. What are the most overlooked aspects that people need to make sure that they're taking into consideration if they're going to go through this divorce process?
So there's two things. There's probably three. One is transparency on what's actually there. So getting a really solid inventory, and we've got some strategies we use for that. Taking into consideration the taxes, and then also, from my perspective, not agreeing to things too quickly. And what I mean by that is a lot of times women in particular, like, oh, I'll keep this, you keep this is, and they try to oversimplify, and they end up agreeing to things prematurely. And then, later on down the road, they feel like this cognitive dissonance because they wish that they wouldn't have agreed, because now they have more information, but they want to honor their word. And so I'm like, let's just hang tight until we have everything. So I have a whole methodology that I take people through, and one of the particular things related to property division is identifying the gaps. And so we actually work with private investigators to help us find assets. And so we can kind of talk a little bit about that. I also have something that I often see, and I call it the DAM method, and it's DAM, dodge the disclosure, avoid getting assets valued, and misrepresenting information, because a lot of times people think that there's going to be full transparency, and there isn't. And so women are being asked to make decisions, or men being asked to make decisions without having the full picture.
That's a really interesting thing that you work with private investigators to actually try to find hidden assets. Is there a story that you can share that would be like the most interesting one that you've saw an outcome or kind of crazy thing as a result?
I've got some good ones. Yeah.
I'd love to hear
them. So the first one is, we were working with somebody in the financial industry who's in California, and her husband told her that he had 3 LLCs set up, and we did the asset search and actually found that he had 6. So the private investigator, who actually happens to be an attorney, said, hey, from my experience, I think they may have set up a shell company to divert assets to. And so we were then able to take that information back to the attorney and helped him know exactly what questions to be asking. Instead of just give us all the LLCs, we said, give us this one, this one, this one, this one, this one, this one. And at that point, like, you can't get around it, because we have the supporting documentation to show that these LLCs exist. So he can't lie anymore.
Yeah.
So that was one. Another one, and there's just a lot of them, but there was another one. The client was living in Wisconsin. Her soon-to-be ex was in another state, and we did the asset search and found that he had set up an LLC in Montana with a girlfriend and used his email address for a company with their initials. And, as people are going through divorce, nobody's looking in Montana, for goodness sakes, right? I mean, they're thinking, well, Wisconsin and, the other state, where he is, like, that's where we'll look. And so we were able to ask for specific bank, information records about that particular LLC to identify the, additional assets. So it's been significant. I mean, the amount of things we've found, multiple 7 figures worth.
That's impactful to an outcome, and I think that's admirable work to make sure that somebody's got a fair shake at that outcome.
Yeah.
Not here to weigh in on the individuals involved or their own situation that way, but I think it's important people have, like you said, the transparency and have the ability to make calm decisions in a clear and transparent situation.
Yeah.
How can somebody safeguard themselves from hidden assets or financial concealment?
It's a tough one. I mean, I don't know. Because these guys do it. I mean, at the end of the day, I think it's getting the information, asking the right questions, trying to get passwords, working with a professional like you, right? Like at the end of the day, I know that you guys use a software that allows for there to be some transparency around pulling in all of, and aggregating data. Well, that's helpful, right? So the other piece of it is they can work with their attorneys to request information. So the attorneys have the ability to go direct and subpoena the documents. A lot of times attorneys kind of want to shy away from that because they don't want to look aggressive or non-cooperative. But at the end of the day, if we're asking, and not getting the data, somebody's just got to get it. So there's a couple of things around that.
Okay. So it's hard to safeguard yourself, but maybe I guess what I'm hearing more is like you can try to play nice, but at a certain point you got to go on offense.
That's right. Well said. Yes.
Okay. So changes to income and budgeting. Like I think there's some
this is a top one. This gets me fired up.
How come?
So it gets me fired up because I remember like when I was in the financial industry, right? One of the things that your dad would say is instead of a budget, he would say a personal spending plan. And I'm like, I can get behind that. One of the things that I find related to income and expenses as people are going through divorce is everybody wants to tell the other party how they should be spending their money or not spending or whatever. And so what ends up happening is really kind of a double standard. Like the higher earning spouse, which usually is the guy, but not always, will say, well, she doesn't need this, she doesn't need that, she can live off this. And there's this whole concept around lifestyle. Well, she should be able to maintain the same or similar lifestyle. But it's kind of like want. Like, you can say that, but there's not a lot of meat to it, right? Because nobody really cares. The courts don't care. They're like, listen, this is how much you're getting. You got to figure it out. So one of the things that I've said is, listen, the outcome in these situations, particularly around income or support calculations or whatever, is only as good as the numbers we're putting into the calculator. So a lot of times they'll try to minimize his income and maximize hers. And hers, if she hasn't been working, let's say she's a stay-at-home mom, what that means is they impute income. They inflate it and say, well, if she was working, this is what she would be making. We know she's not working. We know she might not work, but she might have to. But even if she doesn't, we're going to attribute this amount of income to her. And what it ends up doing is reducing the amount that she's getting in support. So it's just all these like games that people play. And so my job is to be able to help direct my clients in kind of telling or asking the attorneys, right, can you run these different support calculations so that we can get an idea of where the support calculations would come in? And, so it's a matter of balancing that with, again, the budget piece of the expenses. But I don't want to have to see people, oh, you got to just slash all your expenses. So then somebody feels like they're going to be, A, homeless or B, eating rice and beans while their spouse is out buying a Porsche and going on vacation. So that's not cool. So it's just, it's getting a baseline of the income and expenses, and then advocating around what are we using for the numbers. If they own a business, what are we using? Are we, there's just so many pieces that go into it.
Yeah. How does that work from an income perspective when you have a business owner and say like they have a large top line revenue and then the net income is modest, but part of the business really in practice is them putting I'm trying to say this without like accusing somebody of tax evasion or something. But
right.
But like you have the people that run a lot of expenses that could otherwise be considered personal in nature, but they have circumstances that they're justifying them as business expenses.
Yes.
So they're running it through as cost on the business. But it's really, how does that sort of work or play out, or what should people expect in a scenario like that?
So there's two different parts to this conversation, right? One is, what is your taxable income? And of course, business owners want to try to make their taxable income as low as possible. So they're really two separate things, right? At the end of the day, um, the key thing is going to be for them to be able to take a look at what the actual business is generating in revenue. And a lot of times what we end up doing is actually having business valuation experts who value the business. And there's multiple approaches that they can take with that. And so they'll look at market approach, they'll look at the income approach, and then they'll look at the asset approach. And on the income approach, they're looking at, what is the business actually generating? So while taxes are important as part of the picture, it's only a small piece of the puzzle when we're talking about businesses. And there's things that we can add back in. So like the depreciation schedules and travel and meals, depending, again, each state's different, but there are certain things we can add back into that bottom line revenue to get a more accurate picture of what the income actually is.
Gotcha. Okay. So it just requires a deeper analysis of the books and records of the company.
Yes.
Really, which going back to the first part of the conversation, you may or may not have to subpoena to get them and really do the analysis on that.
Yes.
I am beginning to understand why people think divorce is such a headache.
I know. And you know what? It's interesting because I just talked to somebody today from Utah, actually. And unfortunately, she's on the other side of divorce. She just signed the agreement in September, heard me on a podcast and had reached out. And at that point, like my role is done. Like once they sign the agreement, I no longer have the ability to help move the needle. And yeah, it was complicated. And I think she agreed to things that are going to be issues on the back end logistically. So, there might be amendments. I don't know what's going to be in store for her exactly. But yeah, I think the key message is like, yeah, these are not, having come out of the financial industry, it took me years to get all the nuances and all the details. And like, it's just doing this and it's all I do. I'm always still even learning something new after 10 years. You're like, oh, okay. Or they changed something or whatever. It's just ongoing. There's a lot to know, right? So I think the key thing there is people need, guidance as they're going through it for sure.
Yes. I don't know. I don't know what to say on that. It just seems like such a horrible process to have to go through.
It is horrible.
I am not jealous of anyone that has to go through it.
No, it is straight up terrible. There's the only good thing that ever comes out of it is, especially for people that are in some kind of an abusive, situation, they hopefully get some kind of reprieve. But no, there's nothing really. Sometimes people will be more empowered or can make good decisions. They have a little bit more peace because, they are away from somebody who's been mistreating them. But at the end of the day, no, the process is terrible.
Yeah.
It's terrible.
Can you share any strategies to help individuals maintain their standard of living or considering like realistic financial adjustments?
You know what? Honestly, that would, in my mind, would come down to negotiating. Because a lot of times women are like, oh, I'll just agree because I want it to be over. And they're not willing to really ask for what they need and push back a little bit. And so they make decisions that impact them for a lifetime.
Okay. I want to move on to another topic that can impact you for an absolute lifetime and is guaranteed to be super impactful. That's taxes. Everyone's favorite topic. So
it is a favorite topic.
Yeah, we're taking this podcast from just delightful to peak joy and discussing taxes, which in our work is super big. Like I do a lot of tax planning and work, not in the filing process with the IRS, but in looking at hey, if option, if investment A produces a 5% return expectation and investment B produces a 5% return expectation, but it's taxed at long-term capital gains instead of ordinary income, like all else being equal, right? You want to take B. But now if you fast forward to like C, well, what if there's an option that's C, but it has a 7% return, but it's got taxes, but it's a lower risk, right? So there's all these components that start to build into it, right? Like, and you have to weigh, in what I do, we're weighing out, returns, risk, and the tax implications, and that the drag or alpha that it has on investments that way. But in divorce, can be some really big tax implications that I think people don't take into consideration, that they could. But I think a lot of people getting divorced, like that's not been on the forefront of their mind ever. Like, what about taxes though? Especially when you start like having to sell assets or whatever, what's taxable, what's realized as income or not. What are the documents that show up the year, February, the year following after a divorce, right?
Yes.
So what, in your experience, what's been the often overlooked tax consequences of divorce?
So I think people are starting to be a little more in tune with capital gains taxes on the sale of homes. So it kind of depends on when the house is getting sold, what their marital status is at the time when the house is sold, if it's a primary residence or secondary. The other thing that I think people are forgetting about is primarily like investments, right? Like if they have brokerage accounts that have gains or losses, how are we going to be addressing those? And that gets a little bit more tricky. The other piece is who's claiming the kids on the taxes, head of household, etc. And, the only way to really know how those things are going to be impacted, particularly around the filing on head of household or whatever, is to have somebody, a CPA, run a side-by-side. I mean, there's no other way to really know what the impact is going to be. So yeah, it's an important piece, of the puzzle for sure.
Is that something that you typically recommend people in this process is like, hey, we should go bring in a CPA into this process and have them run some pro forma tax projections with different, iterations so that we can do side-by-side comparisons. By the way, that's probably going to cost you some money, but it's worth it because XYZ outcome.
Yeah. So, I mean, there's some tax aspects that I can do. But when it comes to, the actual tax returns themselves and looking at the different scenarios, yeah, they're going to want to have a CPA who can do that. And if they don't feel comfortable using the one that they have used as a couple, then they certainly could find their own to kind of crunch some numbers for them.
Okay. And what are maybe like, is there any unique situations or scenarios or solutions that you've seen people when it comes to dealing with the tax implications of assets during kind of the asset division portion?
Ask me that again.
So have you seen any like unique solutions where someone went, oh, that's a really outside the box thought. Like I hadn't considered that, to being when you're faced with tax implications as a result of splitting assets, right? Selling houses, moving brokerage accounts, selling cars, collectibles, whatever, right?
The only thing that I can think of is a concept around like a circular IRA, which is if somebody was to take their 401k and quadro it, knowing that the other spouse, like to buy the other spouse out, but to get around the pre-59.5 penalty, they could quadro the account and then basically they turn around and pay the other person. So, okay. But I don't know that we want to go there. I mean, it's like, that's probably the main thing. When it comes to taxes, I mean, there's not a whole lot of like, I mean, I would say on the brokerage accounts, making sure that stuff's separated and split pro rata so that one party isn't taking on all of the assets that have the most, losses or gains or whatever. I mean, there's some of that kind of stuff, but for the most part, the tax stuff is pretty straightforward once we know what we're working with.
Okay. And you brought something up about quadros. Qualified domestic relations order. Mm-hmm. It's for anyone listening, that's the document that's filed to split retirement accounts, generally retirement accounts. Mm-hmm. is sort of in half or whatever the calculation is going to be, right?
Mhm.
And so if there's one party, say, that has a $400,000 401k, the Quadro would instruct either, this specific dollar amount or a percentage as of the day it files or whatever, so it's say half the account goes to the other spouse. And so even though the spouse with the 401k is still working in the company, they file this document, the 200,000 goes to a new, to the other spouse initially within the 401k plan, but they typically don't want to be affiliated with their ex's company. As as much as they don't like their ex, they probably don't care for their company either. Is my thought.
It's a little odd to get our mind around that. You're like, okay,
so they
I have a 401k, it might, but
I
want to talk about this because this is a good one.
Yeah, well, correct me if I'm wrong, but when you're filing those Quadros, right? So you can file the Quadro to say, hey, give me my 200,000 in a new 401k account in my name. But you could also file it, and instead of maybe one Quadro that says, give me the 200,000 there, you file two Quadros, and one says, give me the 100,000 there and give me 100,000 sent to my checking account, right? Cash me out. And that's where you get around, at that point is where you get around the 10% early withdrawal penalty. Is that, I think I understand that correctly.
So how that works is, so let's say, for example, using your example, there was this $400,000 account. They split it. There's 200,000 401k at your, ex's employer. At that point, you've got a couple options. If you were to so it's not necessarily creating two different Quadros. You create one Quadro, and the Quadro allows people to do a couple things. One is they could technically leave it there if the company allows it, which again, most people don't really want to do. But there are some reasons that people might want to. They could roll it over into an individual retirement account, so they get it out of the plan. It's a lateral move to get it into an individual retirement account. Or they could take out a distribution, which would be taxed but not penalized. So they avoid the pre-59.5 penalty. So one of the interesting things about this is, I think a lot of times people are like, just roll it into an IRA, which is not a bad move. However, it all depends on the goal of the person that, is the recipient of those funds. So one of the things I learned recently, and I was on a panel in Chicago about this, and the person who I was on the panel with was a mediator who's worked in this industry for 20 years, and we were talking about this exact concept. And he didn't believe me, and so he called another CDFA who verified that, this is a real thing. So if the plan allows it and it's been quadroed, the person who's receiving those funds could actually take multiple distributions out of there. So let's say, for example, they got the 100,000, I need 20K. Right? And I'm not advocating for this. I'm just saying, hey, some people are in a spot where they need access to cash. So if they took the 20K out, right, they would still pay taxes on it, but wouldn't pay penalty. Then they could either leave that 80 there or roll the 80 into an IRA. At that point, of course, all bets are off on the tax penalty. So they've kind of eliminated that option. If they kept it at the 401k, they may be able to actually take multiple distributions off of that account and continuously leverage avoiding the pre-59.5 penalty. And I was like, wait a minute, what? So that was something we learned recently that has changed, and people can do it. So it's just kind of depends on what their overall goals are.
Well, and you're only going to know that by getting the plan summary documents or something from that specific 401k.
That's right.
It's not every 401k, but maybe your 401k, maybe your ex's 401k, I guess really is
That's right. I mean, and here's the thing, right? It's such a cottage industry in a sense of there's no one universal across the board. Every plan does you have to look at the plan documents. You have to talk to people. You have to, make sure that you know what's going on with that, because each company is different.
It just keeps getting better. When it comes to, I think one of the questions sometimes, especially in particular when people have kids, And, when you're married, you had this goal of, hey, I want to make sure we pay for the kids' college or whatever. How have you seen that navigated in a divorce? Like, what are the things people have done to manage that instead of just saying like, well, I guess they'll just figure it out. We'll each figure out our share portion when they're, college age. Like, what does somebody do to kind of sort of keep that goal alive if that was important to them?
So it's always tricky, right, when we're talking about college age kids, especially depending on what state people live in, because a lot of times the court will have jurisdiction over the kids until they become of age, and each state's a little different. Sometimes it's 18, sometimes it's 21, but the whole concept is whatever that age is for your state, that's how long the court would essentially have jurisdiction, and child support would be paid, and we could talk about variable expenses. Once kids get over that age, like for example, I'm in Wisconsin, and that age, the rule there is 18 or emancipated, which is graduated from high school, the latter of the two. So in that scenario, right, if we have somebody who graduates in May, turns 18 in, July, then the child support and or the variable expenses would be addressed through July. At that point, it's a little bit of the wild, wild west, right? I mean, if they have college savings, which many times people do, yes, they can use that for college expenses and that can help. But the other part with that is usually there's one party, one of the parents who's listed as the custodian, and that gets a little tricky too, because then the non-custodial parent has challenges in feeling like they're involved in the decision because, usually the custodial parent then doesn't have to run anything by them and they could just make unilateral decisions. They could honestly take the money out. They're not supposed to, but they could say, hey, I'm going to pay taxes on it and I'm taking the money. So it gets a little bit tricky. But yeah, people have to, again, have good communication if at all possible, if they're on talking terms, to be able to figure out who's going to pay for what, and make sure that when they have their marital settlement agreement drafted up, that final agreement, that it spells out who's going to pay for what, how is it going to get paid, when is it going to get paid. The more details that they can put into that, the better. And sometimes, the attorneys get annoyed by that, like, oh, it doesn't matter, you'll figure it out later. Yeah, and, if they don't figure it out, now trying to figure it out later just becomes even more challenging. So one of the other things, and again, it's a little bit, you could use it for big ticket items or small ticket items, but a lot of times I will encourage people to use an app, actually. There's a couple really good ones. I have one of my favorites is called Decomply. And it was created by a gentleman in New Jersey, and I've had an opportunity to not only test out the app over the years, but I'm listed on his website as an expert. And the way that this app works is it helps people keep track of their expenses. So they could put in, receipts, they could put in manual entries on the app, and then they could actually send themselves a report that would highlight, who's paid for what. So if let's say one semester one parent pays, and then the other semester the other parent pays, or one covers the books and then they're splitting it, so you can keep track of it. So it takes a little bit of the administrative nightmare out of it, and then you can actually pay within the app and it will track the payment as paid. So if you have somebody who's going to, college for 4 years, let's just say, you would have this record of, this time period, which if there was any discrepancy, you've got the documentation, to be able to have a conversation. Now, usually if your kids are considered adult in your state size, there's not a whole lot you're going to be able to do, but at least it helps with, again, that transparency and having the communication and the record keeping that hopefully will help to facilitate squaring up on those expenses.
Yeah. Okay. Record keeping component to avoid conflict. I like that. Conversation's not getting any more fun, but it's productive. I think it's under talked about, right? I think all this stuff is just under talked about, and that's why people go into a divorce feeling so blind. And I have seen some of the most wild outcomes of divorces. Good well, it's always, the wild outcomes is always good and bad, right? It's good for one person and bad for the other. But anyways, I think it never hurts to go in with some expectation and plans. Kind of wrapping up, Rhonda, what do you think are the most important proactive steps somebody could take to prepare themselves if they suspect like divorce is not only inevitable, but imminent?
Yeah. Well, I definitely think that for people to be able to start gathering and organizing information, it depends on how much transparency there has been in the relationship already. If they don't have access to passwords, if they don't have access to statements, they're certainly going to want to try to get their hands on those. And I always say, like, women are really good private investigators when they have to be. So when they know what they're looking for, right, they can start to kind of look for those things. They can also request IRS transcripts if they have signed a joint tax return. So at the end of the day, if they're like, yeah, I think I signed them, but I don't have the copies, you can just go direct to the IRS and request those. So then they'll mail you a transcript. If you've refinanced the home in the last couple of years, you could call the broker and ask for a copy of, your closing documents, which again will give you insight into what you have and where it is. I think the gathering and the organizing of the information is really important. I think getting a good handle on expenses. So, I mean, again, nobody really likes, the word budgeting, but it is really important for women to start to get an understanding of what they have, how much it's costing them each month, a little bit of a handle on, again, the income, which we'll be able to do with the tax returns. And then I think the next step is starting to kind of build out your team. I think a lot of times people think they have to hire the attorney right away. And I, in fact, say, gosh, I would love to be the first stop because I've got really great relationships with attorneys that I then can make those introductions. We can build out the right team. We can make sure that we're moving in the right direction because there is a lot we can do before people actually file. So the last thing that I would say is if you aren't sure what is coming in via mail, right, and you think maybe things are being siphoned off the top, you can request informed delivery through the United States Postal Service, and it's free, and they'll take a picture of all the mail that's coming to your address and send you an email each day. And that way then you can start to notice if there are things that seem to be missing from, well, in my house, it's like the pile at the corner of the of the kitchen, but you start to notice if there are things that are missing, and they can look for clues. One of the examples I'm thinking of in particular is I had a client who got something in the mail. She thought it was kind of junk mail, actually. It was from a credit union. So she opens it up, and it was a $5 savings account. Well, what we know about checking, right, and savings and credit unions is that usually if there's a $5 account somewhere, it means there's something else because they have this kind of, rule where if you're opening up a loan or you're taking out a home equity line or you're doing any of these kinds of things, you got to have something in the savings. And so they throw $5 in there, right? And so that was a clue like, hey, maybe there's more at this particular credit union. And sure enough, there was actually a home equity line that her husband had taken out. She didn't know about it, that he had tapped into the equity in their home. Well, that's a big deal, right? When we're looking at transparency and trying to get a handle on the finances and on all of that kind of stuff. So just an example of being aware, being diligent, and just trying to gather as much as you can.
Man, it's like the sleuthing, it's like you got to be a sleuth in your own house.
It's tough.
I feel so bad for people that
tough.
have to be in this type of situation.
Well, and it's tough because I think a lot of times people feel like, Rhonda, I'm being dishonest. I don't want to, and it's like, listen, I always say, I understand. And it's not if you're going to tell them, it's when. And, sometimes it is unfortunately safety or preservation of, things that they're really concerned about, where things are going to go. And so it's not bad for us to get an understanding of where things are at. Technically, they should have access to this stuff anyways. It's just that one party has decided to hold the stuff hostage and not share.
Yeah. Okay. I want to end on this one last question. So you've been doing this for 10 years, hundreds of divorce cases. You've by proxy then worked with hundreds of potentially hundreds of divorce attorneys or attorneys that are doing a divorce case, which there's probably a difference there.
There is a difference. Yes.
And that's what I want to highlight. So if somebody is going down this case, yes, it may be ideal that everyone reach out to you, Rhonda, first, and you're the first point of contact. But I think for so many people, it's not. I know you work across the country, but not ever, right? You can't help everyone in the world, Rhonda.
That's right. I want to, but you're right.
Yeah, you're one person. So if somebody goes out and they start talking to attorneys, right?
Mm-hmm.
Like how does somebody interview an attorney? What are some of the critical questions or that they could ask the attorney, or what should they be looking for in qualification of that attorney to make sure that but help them have the best chance of success at their ideal outcomes?
Yeah. I love this question, right? Because again, attorneys play a really important role in a lot of divorces. So here's what I would say about that. The first thing is we have to trust our intuition, right? So if you make a phone call or you go to an attorney's office and you feel dismissed, you don't feel like they're listening to you, you feel like they're, whatever. I mean, we gotta listen to that. I don't care how many super lawyer awards they've won over the years or how many people have recommended them. If you leave that office and you don't feel heard, they're probably not the right attorney for you. Because what I have seen with those is it just becomes additional issues down the road. And it usually gets worse, not better. So I have an acronym, like I have an acronym for everything. And it's, okay, what are kind of the 3 things that we're looking for in hiring an attorney? And I call it the CIA method, which is communication. Are they respectful? Are they timely? Are they thorough? Or are you getting just these one-word answers that aren't helping? Or are they just forwarding emails to you? I mean, there's these little things where, communication. And you can ask them. You're like, Rhonda, I don't know. I haven't hired them yet. Well, ask them, how do you manage your email? How quickly do you respond? What's a reasonable turnaround time? How do you prefer to receive the emails? Do you like bullet points? Do you, would you rather I give you a call? Like talk to them about what's going to help you help them, right? Or help them help you. And then the I is integrity. So that's a big one. And one of the ways that, again, it's hard to know, right, when you haven't worked with them before, like, well, I think they have integrity. And sometimes we don't know until we get down, into it a little bit. But I would look and see if they have any complaints against them. You can reach out to your state bar and see if there's been any formal complaints and things like that. You can ask around, right? I mean, certainly, that's part of it. And then the A is advocacy. And this is where a lot of times people think that their attorneys are going to advocate for them. Like, Rhonda, isn't that their job? Well, kind of. They're going to help tell you what the law says. They are going to help, hopefully advocate in the sense of, kind of arguing, if you will, for your point. However, a lot of times they're going to be relying on you to tell them what you want. So, the advocacy piece, somebody who's really willing to go to bat. And I will tell you, I mean, I've interviewed a lot of attorneys across the country, and there's a very small handful of them that will actually advocate. It's, hey, well, this is how we've always done it, and you're just going to have to figure it out, or you're just going to have to deal with it, instead of saying, listen, let's come up with a strategy. Let's think through, and I will always say, okay, well, if they're recommending something, ask them, okay, what is the case law that supports that? Or doesn't support that, or, whatever. So I think it's really important for people that are going through divorce. They need to be really advocating for themselves and making sure that their attorney is going to truly advocate for them. The other thing that I'll end on here related to that is ask them for example. Say, listen, I know you can't tell me the name of, the client that you worked with, but give me an example of a time when you advocated for them and they actually got a great result. And I think it's okay for us to kind of put a little pressure on them to tell us, because at the end of the day, like I said, there's a very small handful of attorneys I've worked with that actually do that well, but the ones that do are excellent at it.
Those are all really good points. I like the CIA method. Right in the line with all the sleuthing you're going to need to do. Well, I think that covers like a lot of really, really interesting stuff that people, I mean, interesting to me, but I'm a financial nerd, so we'll see. But I think it's valuable. I think we've covered a lot of valuable things that people need to start considering if they, if they do find themselves in a situation where, divorce is again imminent or underway, which I don't wish on anyone. I don't want anyone to think I'm advocating for divorce in any way, but I think, like if we're working, with you or you're working with Rhonda, we still want to help our clients. And so we're willing to advocate for somebody that is going through divorce, but that doesn't mean that we're advocating for divorce.
Yes.
So.
Well, and that's where, we just recently rebranded, and that was one of the things, like, I'm not advocating for divorce, but by the time people reach out to me, right, they've made that decision. And, I want to be, if possible, right, that person. I believe that really at the end of the day, when people are going through, the quote that comes to mind, and I'll end with this, is Kristen Armstrong had a quote, and she says, when you find yourself going through a difficult situation, surround yourself with the strongest, finest, most positive people you can find. And that would be my encouragement to people, is there are good people, and surround yourself with the people that are willing to be that positive person as you're going through something really challenging.
Yeah. Rhonda, if somebody does want to reach out to you, what is the best way to get hold of you?
Website is wfwcdivorce.com. wfwcdivorce.com. They can check out my podcast called Disrupting Divorce. We've got some great blog articles, and they can check out a free resource. We have a free mini course on 6 ways to get a fair divorce settlement.
That is a lot of places to find some value. So I appreciate you taking the time, and I want to say hopefully we have you on again, but I'm not sure I ever want to dig deeper into this.
Hey, it's okay. I don't take it personal.
Yeah. No,
but thank you for the opportunity.
You got to try to make light of some of this stuff a little bit, as best you can.
Yeah.
So,
yeah.
Anyways, appreciate you.
Thank you.